Hi everyone, Piotr speaking. Welcome to my weekly Forex update. This is a weekly Forex analysis. So we start with the Euro US dollar monthly chart. On the monthly chart you can see the current candle. It's a green one, currently a green one. In my opinion, it reacts to this July candle. So this is a kind of reaction to this candle, and here on this chart I've got another moving average, so-called T line, and this market is reacting to this T line as well. Yeah. So some traders they're using this exponential moving average, and just to keep them with the trend, and they stay as long in the long positions as long as the market is above this moving average. Yeah. So this can give us some support for staying in the long positions. So I do not rule out that the market may go up and retest this areas here, or this resistance line. This red one. Okay, we have broke through this Bollinger middle band. This is a positive sign. Actually, it's a positive sign. And the only negative aspect in this whole situation here is this formation, this bearish engulfing, in my opinion. Yeah, this is bearish engulfing. Okay, so this was quite strong, and the question is whether the market will be able to break above those levels. Yeah, so that's the question. Okay, if you have a look on the weekly chart, on the weekly we've got a green candle, and we had a small candle here, looking like a doji. Yeah, let's say that's kind of doji, kind of hammer. Yeah, and this was in the area of Bollinger middle band. Yeah, and the whole formation, in my opinion, looks like a bullish formation. Okay, so this is one point. The another point is I have adjusted my resistance line here. So this is the previous one, and that one, this is a new one. Yeah. So that adjusted one. Maybe let's put it in a red color. And the last one, the very thin one, this is the resistance line when you connect those upper shadows of those candles. Okay, so what we've got here at the moment, the market is still reacting to the red one resistance line. So that is not broken yet. This is one point. Another point is, I think, in my opinion, we are still reacting to this moving average 200. Okay, but at the end of the day, this is a green one. Yeah, so a green candle for a whole week. So that should give you at least one good trade setup for a long position in the coming week. Okay, and for those of you who are watching my videos regularly, so I said last week that I've got here the first impulse. This is the correction. The correction, you can see it here on this chart. The correction was very accurate and stopped at this Fibo 50. Yeah, so this is a typical for a deep correction. And yeah, this is this downward movement. Yeah, so the market make a reversal here and went up. So this is the situation on the weekly and on the daily chart. Yeah. So for now, the only question which remains is whether the market is willing to go up or to go down. Yeah. And if you consider this downward movement as an impulse, as a downward impulse, yeah, so you will see that the market did a correction on the 4 hours chart, which stopped at the 61.8 Fibonacci level, very typical for a deep correction. So if it's 1, it's A, B, and C, so that's a correction as well. Okay, but for this downward movement. Yeah. So, and you can notice it here that the market reacted and tested this this level three times already. Okay, I have plotted here this BAT pattern. I will prepare some separate video for my harmonic patterns, and I will explain how to trade those harmonics patterns. But that one looks like a bad pattern, so that should bring the market to the upside if those levels above here, that the tops of this formation will be broken. In order to be sure that it's broken, I usually go one interval lower, and then upload a resistance line and wait until this resistance line will be broken. Okay, so this is one of my strategies, how to tackle and how to deal with those harmonic patterns. Okay, so it's not happened yet. That hasn't happened yet, and yeah, it looks like the market is respecting this resistance here. Okay, so this is what we can see now, and to sum up it somehow, so I think we have to wait a little bit and watch what the market will do in this area. Whether we will go up, if we go up strongly, and we'll start breaking those tops here, yeah, this will be a positive sign at the end. Yeah, and in my opinion, I think I can already wait a second. Yeah, I think I can delete that one. I don't need it anymore. And there's this green Fibonacci levels, and these green levels, they measure the retracement of this movement here, and we've got this 78.6 level and 88.6 levels. So there are two typical levels for retracement as well. So because I used to treat this movement as a downward movement, and this whole correction as a correction as a second wave correction. Yeah? If it's one, that might be a kind of ABC correction which ended somewhere here. Okay, and then we will start moving, start falling down, and start the third, the strongest wave to the downside. Yeah? So this is the alternative scenario for this whole counts here. Okay. For me personally, it looks more bullish than bearish. Yeah, because yeah, that looks quite nice. Yeah? So it's 1 and 2. So I think we may go up. We may go up. So I could actually plot my trend following system like that on the charts. I put it in blue. So each time you see blue lines on the chart, blue Fibonacci levels on the charts, it means my trend following system. And as you can see here, it's also quite clearly that we made a movement from the Bollinger lower band up to Bollinger upper band. We did a correction to the 50 level, 61.8 to the Bollinger middle band, and now I will wait until the market will break through this FIBO 100. Okay, I should have a fresh breaking through the zero line on the MACD indicator. It's not a fresh one because I had this first breaking zero line here. Okay, but I think that one, yeah, might work as well. Yeah, might work as well. Yeah, because okay, if the market is not willing to fall down, it will go up. Yeah, very simply. Okay, so you have to be prepared in such situation where you actually cannot rule out any of those movements, yeah, to the upside or to the downside. Yeah, so you must be prepared for both movements. And if the market goes up here, you just go up as well. Okay, considering those levels as well. Yeah, this is also quite important. Let's measure the first one. The first one is, I think it's less than 25 pips because I usually use a filter. Oh no, it's 40 pips already, 50 pips. Yeah, okay, so so most probably I will have my first target at that level if it goes up, because I will set up a buy stop signal at this level. Okay, so 26 pips as a filter, and then one have to be a bit cautious to this level. Okay, but this will what may come. Yeah, I think the answer for this will be here on this 4 hours chart. Okay, and this butt pattern hasn't been formed yet. Yeah, it looks like that the market was reacting to this right arm here, this right leg, but has been stopped or was stopped at this level here. Okay, so I think that's what is quite important for on the Euro US dollar. I will move now to Euro Japanese yen. Okay, the monthly chart, the monthly candles, we've got those tops here. So this is important. Yeah. Okay, the market has reacted based on those candles to these levels here. So there must be some resistance here for the markets, and the market is reacting to that level. Yeah. It was a strong movement to the upside, and actually I was looking for a deeper correction here, but it hasn't happened yet. But on the RSI indicator, you can see that we have already in the overbought area. Okay, that's the first upward movement to this level, to this area. Usually it happens for the second time. You can, and it's not that strong. You can say, okay, good. The strength of the bulls are weakening. Yeah, but in this case we are around this 70 level, so it's not that easy to say it only based on this RSI indicator. Yeah? But at the end, but it's already in overbought area. Good. Weekly, on the weekly, it's a green candle with the upper shadow, and that's similar to the previous one. Yeah, so we are seeing some weaknesses on this charts. Yes, in this market. Okay, but still, I'm expecting, or I was expecting in the past, that the market should move up here. Okay, to this black line, or to this 161.8 Fibonacci level. So that was possible. It was based on this movement in the past, yeah, and the market actually stopped and did this correction. And now is the question whether the correction is already over and there's a fresh movement, the last fifth wave to the upside, or this is something else. Okay, what we could have here as well, it's called truncation. It says that the last fifth upward movement isn't that strong to break this top. Yeah, but this is for those who knows Elliott waves and how to count Elliott waves, understand the Elliott waves theory. Good. On the daily chart, yeah. In my opinion, those are 3 corrective candles, yeah, and the market is at the moment reacting to this resistance line, which is now a kind of support area for the market. And I already had one upward, one long trade based on this one FIBO 100, where the FIBO 100 was broken here. Okay, so my buy stop signal was triggered, and I did around 10 or 15 or 20 pips. Okay, that was my first take profit area, but I'm trying to say whether the market will be strong enough to climb up to this 161.8 level, what usually happens if such a breakthrough FIBO 100 happens. Okay, this is also a kind of trend following, and if this will be broken and the market starts climbing up, usually it gets up to here. Okay, on the fourth chart, measure this whole movement. Like this is a 1, this is a 2, so A, B, C correction. This is a 3, very precisely, very accurate here, and this is a correction, and this correction stopped at this FIBO 50 and at the initially at this FIBO 38.2, also very typical. And if you consider the 1 hour chart, you can see it happens twice. This is the first situation again, and on Friday in the late afternoon the market reacted for the second time to this level. Yeah. So it looks like that the market is analyzing this level, and the market is reacting to that level. Yeah. So I have here my resistance line. If this would be broken, yeah, this is a good chance for a nice long trade setup. A long trade setup here will be actually in harmony with this weekly candle, because this is a green one. It's above the Bollinger Middle Band. Yeah? So this is a positive sign. Okay, I will leave it like that, and then move to Great Britain Pound, Japanese yen. Here on the weekly, we've got a strong green candle, and we've got a butterfly pattern, and this butterfly pattern usually indicates the market is willing to change and change the trend, and most probably go to the downside. Yeah? So I'm waiting for that, and I'm trying to say when it happened and how it happened. And I had a count on a daily chart, which is 1 and 2, and this is 1, 2, most probably 1, 2 again. Okay, because this third upward movement hasn't been done yet. Okay, and in my last update I've talked to you about this situation, about this upward movement and this reaction to this upper channel boundary. Okay, and the market reacted to it very precisely, and you could see it on the 1 hour chart, where the market was here in this area, and we had a nice downward movement for about 130 pips. Okay, and yeah, for now, okay, for now I think we should still have at least one good long trade set up for the next week. Yeah, so that will be in harmony with this weekly candle, but we shouldn't forget about this pattern. Yeah? And I will, as I said, I will prepare an additional video regarding those harmonic pattern, how to trade them, because I will be looking for a nice support line which will be broken on the daily or on the 4 hours chart. And this is one of those supports line which hasn't been broken yet, although for some traders who put their support lines like that, it was already broken, and some people or some traders went short already, and they were caught in this most probably unpleasant situation, because they are in red now, yeah? So they're losing money somehow. But I had analyzed the Euro Japanese yen and had this level on the Euro Japanese yen, I was also pretty sure that the market did a kind of correction here, and this will most probably move up to the upside once again. Okay, so that was the reason I haven't sent any short signal to my subscribers at that moment. Yeah, when that was broken, I waited until Friday, because that happened on Thursday, and I waited until Friday. And Friday in the late afternoon, I sent a short signal based on this 1 hour chart, and we did 40 pips. Okay, 40 pips, and I'm still thinking about this about breaking order, because in the past I used to trade such breaks as well. Yeah. And actually I used to open a short position here, and I added to the position somewhere here. So a short trade setup is still possible here, in my opinion. Yeah? But what shows you, or what should indicate that it mustn't be that way? On the daily chart, you can see on the MACD indicator that the MACD indicator did a top, and then there's another top, so there is a strength in the market. Yeah? So that is the reason, and I've already explained in the previous video that I had this trade setup, this long trade setup based on this FIBO 100, and the market may get up to that point. Yeah? So it means that on the 4 hours chart we can have a nice short trade setup, but somewhere here. Okay, let's check on the daily. This is 159. Where is 159? Okay, still up here. Okay, so we can move a little bit to the upside still, and then this breaking through this support line will happen. Okay, so I think that's all for the euro, for the Great Britain pound, Japanese yen. Okay, I'll try to update you during the week. So if I find a nice trade setup, I will send you a signal. Good. USD Japanese yen monthly. Okay, there's not much to say about it at the moment. On a weekly, we've got a shooting star, yeah, a doji candle. Kind of weaker candle, which is still above this Bollinger upper band. Yeah, but watch what happened what is happening on the daily chart. If you zoom out, okay, you will see that most probably we're in a kind of triangle formation. Okay, and we have reacted to this upper boundary here, and there is a chances that we will test this lower boundary here, these lower levels here. Okay, so so to be honest, I'm sure how this pair will react. Yeah, I will be analyzing it further, and in such cases when I'm not so sure, I'm just waiting. I'm just waiting for the market to show me the right way. It's very simple. Yeah, I don't have to rush myself, and I don't have to trade each pair. Yeah, I pick up the best trade setups and I trade them. Very simple. This is the best approach in my opinion. Yeah. Okay, I've once already explained that might be a 1, A, B, C, and this might be a 3. Okay. So that might be a new, fresh upward movement. Yeah. But still, that might be an A, that might be a B, and that might be a C or 3. Yeah. Okay, we have to wait a little bit for that. I think we will be moving in this area up here. Okay, until this will end, and then we will have a breakout from this formation. Most probably to the upside, because the trend on the monthly chart is a upward trend. Okay, good. So let's check the Great Britain pound US dollar. Great Britain pound US dollar monthly chart. I've plotted this butt pattern. Doesn't look that perfectly, that harmonic, but I will explain in a separate video. I think the market may react to those lines. I have them on my weekly chart as well. So this is this blue one, it's the first one, and there is this dotted one. This is from the monthly chart. Okay, so this is one point. Another point is the market, considering this downward movement, may react to this 78.6 level, which is typical for a second wave correction. Yeah, still possible. Yeah, okay. Typical is 50 or 61 in my opinion here, but okay, those levels 78 or 88.6, they are also quite common. Okay, and if you measure this upward movement, which is a 5-wave movement, 1, 2, 3, 4, 5, and you measure the first one and put it by the end of the extreme of the wave 4, you've got a target for the wave 5 for this upward movement. Okay, and this is in the same area as this level. Okay, so we've got this line, this resistance line, we've got another resistance line, and we've got two Fibonacci levels where the market may end this upward movement. Yeah? So we can prepare for a short trade setup anyway. Okay, but considering the last week, we've got a strong green candle, which is actually at the moment by the Bollinger Upper Band. Yeah? And typically, or quite frequently, the market makes a reversal signal by the Bollinger Upper Bands. Yeah? Okay, one example, another example here as well. Okay, here, so it happens all the time. As I'm preparing, I'm looking for a short trade setup. Good. On the daily chart, I've got a support line, and as mentioned, okay, so I'll wait until the market will break this support line. If it happens, this will be a good trade setup. You can already notice that here this MACD indicator did a lower high, and the market did a new high. So market got a new high here, and considering this level and that level, and MACD got a top here, and this top is lower than the previous one. Yeah? So this is a divergence. Okay, and this indicates, okay, that there might be a trend change. Good. The monthly charts, the monthly candles, they are quite strong. They are quite strong. So, but anyway, I think this should give us a short trade setup very soon. Good. Gold. Good. Gold on the weekly chart, a red candle, quite strong, with those doji candles. So this is a strong reversal signal. So this is one point. But another point on the daily chart, yeah, I was wondering, I was asking myself, I had a top on the MACD, this is the first top, there's another top, so I got this trend following trade setup here, moving from Bollinger Lower Band up to Bollinger Upper Band, correction, and breaking through this FIBO 100. That gave me a long trade setup. The market wasn't able to reach that level. Usually when it happens and the market goes down, market tries to get to make a reversal signal and try to get once again to that level, retry it. Yeah. So I was asking myself, what's the market? What is the market doing here? Okay, and I thought that the count on the 4 hours chart, we can treat it as a correction, like A, B. So that's a B, not a X wave, that's a B, and that is a C line. There's a C wave to the downside, and you should count it as an impulse. So it's 1, 2, 3, 4, and this is the last 5 wave movement. The last 5. Okay, this is a 5, and if you measure the first wave and put it at the end of at the extreme of wave 4, which is here, you've got a very nice target for the wave, for the 5 wave, for the last wave, and now you are not surprised that the market did a reversal signal on this area. Okay, and on the daily chart, if you measure the whole movement here, you've got a very nice and very precise reaction to this FIBO 50. Okay, so that might be a 1 and that might be a 2, in my opinion. Okay, good. The negative, I mean, or the more bearish scenario would be that the market, that the MACD indicator broke through this 0 line, which shows some weaknesses on the market. Yeah? But this could be, or the market can still turn around here. Okay, so this market can make another reversal signal here and then start going up again, because I think that was a 1 and 2, and this is a 3, and this was a 4 wave correction, and now we are most probably heading to the 5th wave, to the upside. Okay, so in my opinion, okay, you can watch and observe this level here, what the market will do at that level. That may give you a nice long trade setup, in spite of this red candle. Yeah. But anyway, you should be cautious to this situation, because you will try to trade against the weekly candle. which is usually not the best way to do. Okay, I do not recommend it actually. Actually, you should be looking for a short trade setup. But what could happen, what can happen, the market can make here, which is called truncation. Yeah? So if we will have if there was a 1 and 2 and 3, 4, the fifth wave to the downside may not be that strong and may end up at the same level here, okay, as the wave 3 did. So that is what can happen. Okay guys, that is all for this week. I will be preparing some additional videos and some updates for the coming week. So if you're interested, I will be glad to show you how I analyze my forex pairs and the forex market. Okay, have a nice day. Ciao.